Welcome back. You're watching The Money Show on ET Now. This is our Spend with TMS segment. And today we're going to be talking about gold. Why not, right? Everyone's been talking about how gold prices in India are a record 43,000 per 10 grams. For a very long time, you were just seeing gold between 25 and 32,000 per 10 grams. It was just pretty boring, right? Especially since almost every Indian household has gold, either in the coin form, the brick form, or in obviously the Indian ladies' favorite, the jewelry form. Now the question is that we've been getting from a lot of our viewers, with gold at 43,000. Let's say if today I need the money, would gold be the asset that I should perhaps then sell, get some money out of it, and perhaps invest in some other lucrative asset? So to talk about that, to talk about the strategy that you should adopt and how much of gold should be in your portfolio purely from an investable point of view, I have with me Suresh Sadagopan, founder of Ladder 7 Financial Advisors. Thanks so much, Suresh, for joining us on The Money Show. I think, like we were just talking earlier, right? You've been inundated with this question that, "Arey 43,000 ho gaya, abhi to I think main bech dalu kya? Mere wife's gold coins, gold bricks, should I just sell it off and sort of, put that money somewhere else?" Because I think for the last 10 years, gold has been a very boring asset.
Yeah, I mean, it's true that gold has started really going up. But if you were to look at, the gold price over a longer period of time, it has been an asset which has given a fairly steady return.
Okay.
So if 9% appeals to you over a 10-year period or a 15-year period, I think gold has been able to give that kind of a return over a long period of time. So when FDs are giving, say, a very credible bank like State Bank of India, if you go for an FD today, you will get 6.25 or 6.3 or that kind of a rate. As opposed to that, gold has been able to give, say, 9% return. So I mean, I would wonder why somebody would want to sell gold if they already have gold, and that gold is basically from the investment point of view that they have invested in. Now the other follow-up question before you ask me, should somebody invest more in gold? So that's also something that we keep hearing about. Gold is a strategic asset. I mean, in a portfolio, one should have gold to some extent. As financial advisors, we suggest 5 to 10% of gold in the overall allocation. It has been seen, research has shown that it brings down the volatility in the portfolio because gold is negatively correlated with the equities, with crude and with the currency and all that. So typically having a certain level of gold is always good to have in the portfolio. So certainly I'm not suggesting somebody to sell at this point in time, unless somebody is absolutely desperate, they have credit card bills to pay, and they don't have any other source of money, and they want to desperately sell this and pay that credit card bill off. Otherwise, no go. And I'm not asking anybody to run headlong into gold just because the prices are going up. Okay. Both ways.
And the other reason why you should sell gold is, I suppose, if it's more than 7 to 8% of your total portfolio, I suppose.
Yeah, I mean, if it is a rebalancing decision, suppose you have a huge, cachet of gold in your portfolio, let us say 15-20% gold, and you want to liquidate that. Yeah, that's a sane thing to do. But I think nobody will have that kind of an exposure to gold. But if somebody does have that kind of an exposure and they want to rebalance that in their portfolio, I mean, by all means, they should do it.
Another very important question that this whole thing begets is, what is the gold that you should count in your portfolio? Because you have heirloom jewelry that your grandparents and your ancestors have sort of bought so many years ago, and it's been being passed on. So basically the usable jewelry, the ones that you wear, the rings, the stuff like that. And then you have the gold coins, bricks, as well as your paper gold, your SGBs, etc. So what should we consider as portfolio gold?
It's a fantastic question that you have brought up. It's very, very useful from the viewer's point of view. What is there as jewelry is something of a consumption nature. It is like your residential asset. So you are living in a home. Yeah, it has a residual value. It has a value. But we are never going to sell that thing. So it is exactly the same with gold, which is in the form of ornaments. But even in the case of gold coins, even in the case of gold bricks or any other forms that one may have in the form of bullion, even in that case also people don't sell. This is the psychological aspect of gold. And when you buy even gold coins, so the answer to the first one is, jewelry is not investment. Because when you make jewelry, there are a lot of costs attached to making the jewelry, which you can never ever recover, number one. And number two, I don't think anybody can enter the home after asking their wife to sell or anybody to sell their jewelry. So that's completely out of question. So that's an item of consumption. So let us understand that clearly. So there are three other things which can be treated as an investment, like you rightly pointed out: gold bullion in the form of coins, in the form of bars, in the form of say bricks. So those are investments, but that is physical gold investment. Physical gold investment, it has its own problems in the sense that purity can be a problem, storage can be a problem, insurance, you will incur costs. I mean, there are lots of issues surrounding that. So the other form is in the form of ETFs and index funds. So that is a financial aspect of gold, financial asset, which can give you the same appreciation as gold. So that is a proxy to holding physical gold. So that is a fantastic way of actually participating in the gold market. I would say the best is from Government of India, sovereign gold bonds. So sovereign gold bonds are the best because if you have a certain sum of money, you want to invest in gold, you might as well put it in sovereign gold bond, and you are going to get the appreciation of gold. It's a 8-year product. You hold it for 8 years. You get the appreciation of gold at the end of 8 years. It is tax free. I mean, so this is something that will appeal a lot to our viewers. So it's tax free. There is no capital gain on it. And the beautiful part of this particular product is that you're also going to get 2.5% interest. Yeah, of course it is taxable, but I mean, if you had physical gold, if you had just kept the brick in your bank locker, anyway you're not going to earn. In fact, you're going to earn, you're going to incur a lot of
charges.
Yeah, you're going to incur a lot of charges on that. So on the other hand, here purity is guaranteed. The gold price, whatever happens in the next 8 years, that is going to be given, and every year there is also going to be a 2.5% payout. So it's a brilliant product.
Can you liquidate it easily compared to gold bricks and coins?
Yeah. So, so this is a product which is a proxy for long-term gold investment.
Okay.
So having said that, after 5 years, you can liquidate this particular product if at all you wanted, if at all you ever want to do that. But there is a 5-year period in which you cannot liquidate that.
Okay.
So one should keep that in mind and accordingly invest in this product.
So at least 5 years of investments in a sovereign gold, and I think the next one will be opening. The tranche should be opening, I suppose, in the next 1 odd week, roughly. Okay. So if we had to rate the different instruments to invest in gold, if let's say, you know, our viewers, like you're mentioning, right, it's 9% run rate. Who doesn't want that? And in the long term, gold has only gone up. So let's say if you know, some of our young viewers are watching right now who don't exactly have the affinity for buying gold jewelry. I'm sure at least the millennials and Gen Z only are interested in gold. But everybody wants money, everybody wants returns. So everybody will want that 9% interest rate, 9% return annual. Between coins, let's put bullion in one, coins, bricks, jewelry, index funds, that's ETFs, sovereign gold bond scheme. What would be your pecking order?
It's very, very simple and clear. Sovereign gold bond score above everything
right
else.
At the top. Okay.
It's right on top because I mean, that 2.5% is the icing on the cake. There is no holding cost. There is no tax on this. Next will come the gold index funds and ETFs. There is a cost attached to it. In the sense that gold ETF you may incur a cost of expense ratio will be about 0.5. And in the case of index fund, the expense ratio is roughly in the ballpark of 1%.
Okay.
So there is an expense rate, and there it's going to mirror the price of gold. You're not going to get that extra 2.5. Okay. So the costs are minimal, but the costs are there.
Okay.
So now the last one, the least preferred one will be gold bricks and gold coins. Because see, you are probably going to get the price of gold if the purity is right. But the moot point is the purity right. So we don't even know.
And we're not experts.
We are just going around to the corner neighborhood jeweler
store, the jewelry store.
We are buying based on his or her assurance. So we really don't know. So that should be the least preferred option. Of course, suppose somebody want to buy something for Dhanteras or that kind of thing.
That's a different.
I mean, they can buy a token amount is what I would suggest. But actual investment in gold should be ideally in a sovereign gold bond. If that is sovereign gold bond has one negative. I mean, I want to tell you that. So it comes at a certain point only. So currently it is coming every month with metronomic regularity. So that is there. But if somebody wants to buy regularly in the form of an SIP, then of course an index fund or an ETF would be a better option.
Okay. Well, for now SGBs are coming every month, and you know, I think For all the episodes of The Money Show where I've covered sovereign gold bond schemes, when the tranche has come out, there's nobody who said that, no, don't subscribe to the product. So I think that's one more voice of, support coming into SGB. So thank you to the government of India for providing such a product. And thank you as well, Suresh, for bringing in light all the methods in which one can take part in this big rally in gold. Well, with that, we'll wrap it up on The Money Show. Thank you for watching.